Welcome to the Real Money Pathway, where I share my journey from financial collapse to lasting wealth. I'm David Kim, and I'll guide you through practical strategies that transform my finances and can transform yours too. Let's build your pathway to financial freedom.
The content of this podcast is provided for general information purposes only and do not constitute financial advice. Listeners should not act upon the content or information here without first seeking appropriate advice from a financial professional.
Welcome back to the Real Money Pathway. I'm David Kim. When I was rebuilding my credit after bankruptcy, the process was pretty straightforward and pretty slow, actually. You got a secured credit card, you made payments on time, waited months to see if there was any improvement and just hope for the best. Credit monitoring meant checking your credit report once or twice a year, and most people had no idea what their actual credit score was. Fast forward to today, and the credit landscape has just completely transformed. My son, who just had started his career at Meta, has access to credit building tools and monitoring systems that just didn't exist when I was rebuilding. He can see his credit score daily, get personalized recommendations for improvement, and access credit products designed specifically for the people that are building credit, let's say for the first time. Recently, I was helping a friend navigate credit rebuilding after her own financial setbacks, and I was amazed by how many new options existed compared to my own experience. There's innovative credit products, sophisticated monitoring tools, and even AI that helps people optimize their credit profiles. Today, I want to share what's changed and what's new in the credit world. What new opportunities exist for people rebuilding credit and how you can leverage these modern tools to potentially rebuild credit faster than ever before. Because while the fundamentals of credit building haven't changed, the tools and timeline and the rise of AI definitely have. Let's talk about how credit reporting has evolved. The most dramatic change in the credit landscape has been evolution of credit reporting itself. When I was rebuilding, credit reports were like static documents that you reviewed periodically. Today, they're dynamic profiles that update constantly, daily, and include information that didn't used to affect your credit report. For real-time reporting and monitoring during my recovery, I checked my credit report at best quarterly, and my credit score may be changed twice a year. Today, you can monitor your credit score daily through multiple free services. Changes appear within days instead of months, which means both positive and negative changes affect your credit so much faster. This real-time aspect has completely changed credit building strategy. When I made a large payment to reduce my credit utilization, I had to wait months to see that impact. Today, the same payment might show up on your credit report within a week and affect your credit score almost immediately. And now there's alternative credit data sources. One of the biggest changes is the inclusion of alternative data in credit decisions. Traditional credit reporting focused almost exclusively on credit accounts, loans, credit cards, and payment history on all of those accounts that you had. Now the credit models consider additional items such as rent payment history through services like Pay Your Rent, a utility payment history when reported through things like Experian Boost, your bank account history, cash flow patterns, phone and cable payment history, even subscription service payments sometimes. This is huge for people rebuilding credit because it means your responsible payment behavior on non-credit accounts can now actually help your credit score. During my recovery, paying rent on time for 2 years did nothing for my credit, but today, that same payment history could significantly improve your credit profile. The credit scoring models themselves have become more sophisticated and in many cases a bit more forgiving of past financial problems. The newer FICO and VantageScore models actually place less weight on older negative information and a lot more weight on recent positive behavior. For example, the impact of bankruptcy on your credit score decreases much more rapidly under the newer scoring models, where my bankruptcy affected my score significantly for the first full 7 years. Newer models might reduce that impact after just 3 years of positive payment history. Credit monitoring has significantly expanded. Free credit monitoring services have become standard rather than premium. Most major banks now offer free credit score monitoring to their customers if you have a credit card or even a checking account with them. Credit card companies specifically provide monthly credit score updates. Even apps like Credit Karma provide continuous monitoring at no cost. This widespread availability of monitoring means you can catch problems immediately rather than discovering them months later when actually applying for credit. Perhaps the most exciting development is the use of that machine learning and artificial intelligence to provide personalized credit improvement recommendations. Instead of generic advice about paying bills on time, modern credit monitoring services can tell you exactly what actions would have the biggest impact on your credit profile. For example, these systems might tell you that, hey, paying down a specific credit card by $200 would increase your score by 5 points, or keeping a particular account open would benefit your score more than closing it. And finally, the democratization of credit knowledge. That might sound fancy, but it's really, when I was rebuilding, credit scoring was very mysterious. You knew generally what affected your score, but the specific impact of different actions were largely unknown. Today, there's total transparency about how credit scores work and what actions improve them. This democratization of credit knowledge means people can actually make informed decisions about credit rebuilding and building rather than following just some generic advice that may not apply to their situation. Just like I talked about the AI and machine learning, these are tools that take this information and transparency and customize it to your specific credit situation. The downside of all these changes is that the credit landscape just has become more complex. There's more tools, more actions, more options, and more decisions that you have to make. But for people who understand how to leverage these new resources, credit rebuilding can happen much faster than it did during my recovery just over 10 years ago. Given these changes in the credit landscape, the strategies for rebuilding credit have evolved significantly. Let me share some approaches that are available today that just didn't exist during my recovery. First, credit builder loans. This was just an upcoming new thing. Right? They didn't really exist as much when I was rebuilding. A credit builder loan works backwards from a traditional loan. Instead of receiving money up front, you make payments into a savings account, and then the lender reports these payments to credit bureaus. After you've made all the payments, you receive that money you've, quote, borrowed. This is brilliant for credit building because it creates positive payment history without requiring existing credit or putting you at risk of overspending. Self credit strong, some credit unions. A lot of these offer this product with payments as low as $25 per month. Secured credit cards 2.0, right? These credit cards that were secured before have improved dramatically since the story of my $300 secured credit card with a $200 annual fee. Modern secured credit cards often offer rewards programs like traditional cards, provide path to graduation to unsecured cards. They report to all three credit bureaus. Not all cards did this during my recovery. And offer credit limit increases without additional deposits. Lots of them include modern features like mobile apps and spending tracking. The Discover It Secured and the Capital One Secured MasterCard are examples of great secured credit cards that function almost identically to regular credit cards while building your credit. The authorized user strategies have become much more sophisticated and accessible. Options now exist that can add you as an authorized user to accounts with excellent payment history, which then can boost your credit score very quickly. While I'm very cautious about these services, the authorized user approach can be legitimate when done with family members or very trusted friends who have excellent credit. The key is ensuring the primary cardholder has perfect payment history and low utilization on those cards. Then there's alternative credit products. There's been new types of credit products that have emerged specifically for people building or rebuilding credit. These credit builder debit cards that report spending activity to credit bureaus. They help establish credit history without actually extending credit. There's buy now, pay later services that report positive payment history. While I'm a little cautious about these for spending control, responsible use of them can help you build your credit. Then there's subscription based credit building services that report recurring payments like Netflix, or Spotify as credit accounts. Technology enhanced monitoring now has gone far beyond just alerting for changes. Advanced services with tech enhanced monitoring include personalized recommendations for improvements, credit utilization optimization across multiple cards, timing recommendations for when you can apply or make payments, and SIM tools that show the actual impact of these actions that you take. Further, strategic utilization management have become much more sophisticated. We know that utilization is calculated both per card and overall. Having a small amount of utilization, like 1 to 2%, often improves your score better than just a 0%. The timing of payments within your billing cycle also affect utilization reporting, and then different scoring models weight utilization differently. So this knowledge allows for a much more precise credit optimization that really wasn't available during my recovery. With credit mix optimization, modern credit rebuilding and building recognizes the importance of credit mix, having different types of accounts like credit cards, not just credit cards, but including installment loans and potentially a mortgage, a car payment. These new products make it much easier to establish that mix, right? The credit builder loans now create loan history, secured credit cards create revolving credit history, and then alternative loans like Lending Club add additional installment history. And finally, mobile first. Most modern credit building happens just through mobile apps. Everything is a mobile app now, and that helps you take in and act on real-time monitoring, see personalized recommendations, and immediate feedback on actions. This makes credit building much more engaging for you and allows more responsive strategy adjustment. Combination of all of these modern strategies that we just talked about means that someone rebuilding credit today could potentially achieve in 12 to 18 months what took me 3 to 4 years. The key is understanding which tools and strategies apply to your specific situation and using them very systematically and disciplined rather than randomly trying everything at once. Now let's focus in on leveraging technology for your credit success. The technology available for credit building today is amazing compared to what existed during my recovery. Let me share how you can leverage these tools effectively without getting overwhelmed by options. First, you have to choose the right monitoring tools. With so many free credit monitoring options available, the key is choosing tools that provide actionable information rather than just basic monitoring. I recommend using at least two different services because they often provide different insights. Credit Karma excels at providing free, personalized recommendations and has a strong community feature where you can see what strategies work for other people in similar situations. Their credit simulator lets you test potential impact of different actions before taking them. Then there's bank provided monitoring services like I use with Chase, and they're excellent for tracking day to day changes because they're integrated with your actual banking activity. If your bank offers credit monitoring, use it as your primary tracking tool. Each of the three credit reporting agencies also have tools, but Experian has a great free monitoring tool that includes their Experian Boost feature, which allows you to add utilities and streaming services to your credit report immediately. This can provide an instant score increase for many people. Beyond tools, you have to automate for consistency. One of the biggest advantages of modern credit building is the ability to automate those good behaviors. During my recovery, I had to manually manage payment timing, utilization rates, and monitoring activities. Today, much of that can be automated. You can set up automatic payments for slightly more than the minimum amount due. Time to hit your account well before the due dates. This ensures perfect payment history without requiring constant attention. Then you can use automatic balance alerts to manage utilization. Set alerts when any credit card reaches 10% or 20%, so you can make payments to keep that utilization low. And then automate savings for credit building activities. If you're using a credit builder loan or saving for a larger secured card deposit, automate these savings so credit building happens consistently. Beyond automation, there's mobile app integration. The best credit building happens when monitoring and management are integrated into your daily financial routine. Most credit cards now offer mobile apps that show your current utilization, your payment due dates, and credit score trends. I recommend checking your credit monitoring app weekly, not daily. Daily checking can become a little obsessive and doesn't provide true actionable information since meaningful credit changes happen over weeks, even now, not days. Then, with all this automation and tools available, there's so much data out there. So, the data driven decision making that you can affect is enormous. Modern tools provide so much data that making sophisticated decisions about credit building can be much easier. Before taking any major action like closing a card or applying for a new credit or making a large payment, use sim tools to understand that potential impact. Credit Karma Simulator, for example, can show you exactly how closing your oldest credit card might affect your score or how paying down different balances would impact your utilization ratio. And then with that data comes a higher amount of personalized recommendations. Instead of following generic credit advice, use tools that provide recommendations specific to your credit profile. These tools analyze your actual credit report and provide targeted suggestions that will have the biggest impact on your specific situation. For example, instead of general advice that says, oh, yeah, pay down your credit cards, a personalized tool might tell you, well, hey, if you pay $150 on card A, that'll increase your score more than if you paid $300 on card B because of how utilization is calculated across different cards. And then finally, all of this is integrated with identity protection. Many modern credit monitoring services include identity protection features that weren't available during my recovery. These can alert you to new accounts that have been opened in your name, changes to existing accounts, or potential identity theft attempts. While I still maintain my own identity monitoring system, having this integrated with credit monitoring provides an additional layer of protection during your credit rebuilding or building when you're more vulnerable to fraud. Now, with all of these tools available, it's so easy to become overwhelmed and spend more time managing your credit monitoring than actually building your credit. So I recommend starting with just two monitoring services and maybe one credit building tool and adding others only if they provide specific value that you're not getting somewhere else. The goal is to use technology to make credit monitoring more effective and efficient, not to turn it into a full time hobby. The fundamentals of credit building, making payments on time, keeping your utilization low, and being patient, those haven't changed. Technology just makes it easier to execute these fundamentals effectively. So, here are the practical takeaways for this episode. Let's make this immediately actionable. The modern credit landscape offers amazing opportunities, but you need a systematic approach to leverage them effectively. Although I don't have a specific modern credit toolkit, I do have what we've talked about before, the credit score improvement roadmap tool on the website realmoneypathway.com and the realmoneyguide.com. Taking that, you can now further the outputs of that report into a modern credit building plan. Here's a quick 90-day modern credit building plan that you can follow after you use the credit score improvement roadmap. First, establish modern monitoring. Sign up for at least 2 free credit monitoring services. Download your bank's credit monitoring app if available. Set up automatic payments for all your credit accounts and establish like a weekly credit check routine. Then in month 2, optimize your current profile. Use Experian Boost to add utilities and streaming. Optimize your credit utilization across all your cards. Consider authorized user opportunities with family members, and then address any errors found through monitoring. And then in month 3, strategically build. Evaluate credit builder loan opportunities. Consider secured credit card upgrades or additional products. Implement those personalized recommendations from the monitoring services, and then plan that next phase of credit building based on your specific goals. Once everything's established, create that weekly credit routine that I talked about. That just takes 15 minutes. In those 15 minutes, you just check monitoring apps for any changes or alerts, review utilization rates, and make payments if you need. Check for new personalized recommendations, and then update your credit building plan based on your progress. So, this week's assignment, step 1, if you haven't, get on the realmoneyguide.com website and check out the credit score improvement roadmap. Enter your information, which is a basic set of credit score and a few questions that will then output an overview, your credit factors, and recommended actions. Then sign up for that free credit monitoring through Credit Karma or your bank service. Spend 30 minutes afterwards exploring the tools and recommendations that it provides. This whole step gives you access to modern credit building technology, following the credit improvement roadmap that can accelerate your process. Modern credit building is about leveraging technology and data to make traditional strategies even more effective, not about finding shortcuts or quick fixes. The fundamentals, again, still matter: payment history, utilization management, and patience. But today's tools just make it a little easier to execute those fundamentals optimally. Today, we covered the new credit landscape, how credit reporting has evolved to include alternative data and real-time monitoring, modern credit building strategies that can accelerate your progress, and how to leverage technology effectively without getting overwhelmed by options. The key insight for today is while credit building hasn't changed, the tools and timeline have improved dramatically. Today's credit rebuilders have access to resources that can potentially cut rebuilding time in half compared to traditional approaches. In our next episode, Building Your Financial Security Team, we're shifting focus to another critical aspect of financial protection. It's assembling the right professional relationships to support your recovery and your growth. I'll share how my professional support network evolved from just my friend Casey to a comprehensive team of advisors, and how to find and work with financial professionals even when you're rebuilding from setbacks. As you explore modern credit building tools this week, remember that the goal is progress, not perfection. Use technology to enhance your credit building efforts, but don't let the abundance of options paralyze you from taking action. I'd love to hear about your experiences with modern credit building tools. Visit realmoneypathway.com and let me know what credit building strategies and technologies have worked best in your situation or what haven't worked. Your insights help me understand what's really working for people in today's credit landscape, and we can further our conversation with that. Until next time, I'm David Kim. Remember, it's not just about money, it's about building your real money pathway to freedom. Thanks for joining me on the Real Money Pathway podcast. I'm David Kim, reminding you that financial success isn't about perfection, it's about progress. So subscribe now for more strategies, and remember, your journey to lasting wealth starts with the very next decision you make.